Can you borrow from an irrevocable trust? Have you ever wondered if you can access funds from an irrevocable trust? This is a common question for those involved in retirement estate planning. Let's break down the details to clarify how borrowing works with these trusts. First, it is essential to know that an irrevocable trust can indeed borrow money, but the process is not as straightforward as borrowing from a personal account. The legal authority to borrow lies with the trustee, specifically the successor trustee if one is named. Beneficiaries cannot directly take out loans without the trustee's involvement and approval. Next, the trust document plays a critical role. It must explicitly state that the trustee has the authority to borrow money or mortgage trust assets. If the trust agreement does not allow for borrowing, the trustee cannot initiate any loan process. When it comes to securing loans, the trust's assets are often used as collateral. This means that real estate or other valuable trust-owned assets may be tied to the loan. The lender will typically requiring a property appraisal to determine the loan amount based on the equity of these assets. In many states, including California, the trustee must also obtain consent from the beneficiaries before taking out a loan. This step ensures that the loan aligns with the beneficiaries' interests and protects their rights. However, not all lenders are willing to provide loans to irrevocable trusts. Traditional banks and credit unions may shy away due to the complexities involved. Instead, specialized or private lenders may be more open to offering loans to irrevocable trusts, often with a quicker approval process. So, what are common reasons for borrowing from an irrevocable trust? Many people use loans to provide liquidity for buying out other beneficiaries' interests. Others may need funds to manage property tax strategies or pay trust-related debts and expenses. Additionally, loans can help finance repairs or improvements on trust property before a sale. If you are considering this option, here is a simple overview of the process. First, review the trust agreement to confirm that borrowing is permitted. Next, obtain the necessary approvals from the trustee and beneficiaries. After that, get a property appraisal to determine the loan amount based on equity. Then, work with a lender experienced in trust loans and complete the loan application and closing with the trustee signing on behalf of the trust. From a retirement perspective, borrowing from an irrevocable trust can offer financial flexibility. For retirees who have placed assets like real estate in an irrevocable trust, a trust loan can provide access to funds without needing to sell the property outright. This approach can help manage cash flow, cover health care or living expenses, and facilitate the transfer of wealth to heirs without triggering immediate tax consequences or losing asset protection benefits. In summary, while you cannot simply borrow from an irrevocable trust like you would from a personal account, the trust itself can secure loans against its assets if the trust terms allow it and proper procedures are followed. This option can be a useful tool in retirement estate planning, balancing liquidity needs with long-term asset preservation.